Good morning and happy Monday. Happy Labor Day to anybody that has it off. Welcome back to the Daily Grind. I'm your host, Chump Changes, live and recorded. For those of you guys that might be new here, what we typically do is go over crypto news or news in general in the space. I update myself, bring you guys along for the ride. Today is not going to be too much news, going to be more videos, but nonetheless, Bitcoin's fighting 60K. We're actually at 58 something right now. We'll get into that in a second. Let's see who's here in the chat, and then we will dive into it. Mr. Geek of all trades, what's up, buddy? Good to see you, man. Good to see you. Leo Lustig said it's his son's 31st birthday. He feels old. Newsflash, you might be old. Nismo, what's up? Good to see you, buddy. Good to see you. Black Hat team, we got Vinny in the house. Good to see you. Yeti said he's been kidnapped by Matt Electron. He's in the States. Oh boy. We got a Yeti on the loose. We got Crypto Frank. What's up, dude? Good to see you, man. Good to see you. Steven Cicero, Random Miner, Shea Mining, Corey, Carl Coate. Good morning, Canadian Miner. What's up, dude? Random Miner. Good to see you. All right, let's get into this, shall we? Bitcoin looks like 58,561 bucks. Bruh. The hell's going on here? We got Ethereum at 25. Look at that. That was a little tongue twister, threw me off for a second. Solana's 132 bucks. We got 88 33 cents. XRP at 55 cents. Caspa's just at 16 cents. I actually threw 500 bucks into Caspa last night because I knew it was down. Why not? It's a buying opportunity all across the board, in my opinion. LTC 64 bucks. Let's see, ETC's actually, that dropped down to 17 bucks last night, which is kind of crazy. It's at $18 right now. Dogecoin just under 10 cents, 9.7. Damn, look at that. ADA, I already said at 33 cents. Let's see, nothing else really jumping out at me. What's this? HNT. Damn, HNT's been killing it lately. 8.34% up, $7.59. Look at that. Look at that. Interesting. Lithium's up as well, $2. We'll see. It's not in the top 100 coins, so we'll check that out in a second. All right, over here on Crypto Bubbles, checking it out. HNT says 8.8% up over here, $7.58. Crazy. Looks like that's the biggest earner of the day, if I'm not mistaken. Yep. Ordi 7.9% to $29.48. Mr. Max Voltage, good morning, sir. Hadouken to you. Let's see, we got Uniswap 5.2% up on the day, $6 even. Arweave's down 3.9 to 122 bucks. Sats is up 4.8%. Anybody cares? Yeah, that's it, man. Buying opportunity across the board for everything. Render's up 0.6%, but it's down to $5. Man, that's actually a steal. Damn, that's a steal for Render. I might have to get some of that. Damn. All right, flashbang. Actually, I gotta refresh this page as well. Let's see where we're at today. We're at a 26. Damn, look at this. Yesterday was 26, and today we're at a 26. Fear and Greed Index. If you guys don't know, it's a collective overall like consensus of the market, the news, everywhere around the internet. They kind of throw it into one lump sum over here on this chart. The one that's actually on CoinMarketCap, they do not have it correct. Like, it's super delayed or something's wrong with it. So I always come to the actual site and look at it here. But 26, listen, when there's blood in the streets, it's time to buy. That's my opinion. You guys do what you want. All right, let's see. What do we got over here? Top 10 coins by CoinMarketCap over on CoinGecko. We got Bitcoin, Ethereum, Tether, BNB, Solana, USDC, XRP, Lido Staked Ether, Dogecoin, and Tron Coin in 10th place at a $13.5 billion market cap. Look at that. We got Ton Coins in 11th place at a 13.5 as well, just behind Tron. Interesting. Cardano still in 12th place at a 12.1 billion. Wrapped Ethereum, look at this. What's going on here? 13th place. Damn. $10.3 billion market cap. Interesting. That's interesting. Shiba still in 16th place, which is kind of shocking and surprising, and I hope it moons soon. We got Litecoin 23rd place. Nice, not too bad. Caspa still holding in the top 30 at 27th at a $3.9 billion market cap. We've seen it up to a 4.2. Maybe it's been a little bit higher, but Caspa hopefully comes back. These machines are killing us right now. Everybody that has these Caspa machines, the yield is just ass, man. It is so bad. I think I'm solo mining with my KS zeros, and I think I'm at like 105% luck right now or something crazy. It's awful. I think I heard the Mining King say last night on his stream that he was mining solo as well, and his last block was like 189% or something crazy. It's insane. Absolutely insane. Let's see. Ethereum Classic's in 36th place. Look at that. 18 bucks again. Not too bad. I think Ethereum Classic's going to do well, but I guess only time will tell. Only time will tell, you know. all we can do is sit here and wait, smoke on that hopium a little bit. All right, moving on to the miners of the day. Let's see what we got over here. We got the, oh, actually, you know what? Hold on. We got the AL1s we're going to talk about, but I want to look at lithium. I forgot to look at lithium. Let's see what the price of lithium is. What? Why did that just go white on me? Flashbang. Sorry. Weird. It is at $2. Look at this. A Duke into a lithium. Perfect. But I totally think this is an artificial price pump. That's my opinion. That's what I would guess. That this is an artificial price pump from Bitmain. Or somebody large had to have bought the coin, right? Let's put it this way. If you just bought a minivan, it arrived to your front door, and the shit didn't run well, are you gonna be happy? Probably not. If this thing, I think if this was under $2, they started shipping all these units out, people got them, and they were making ass for profits, there's gonna be a lot of negative reviews. If I do say so myself. That's how I would feel. I would just be pissed. I don't think $2 is gonna hold. That's my opinion. I hope it does for everybody that's got lithium miners, but I don't think it's gonna hold. The AL1 Pro over here, we have $223 a day. This is the 16.6 terahash unit. We got the Bitmain Antminer L1 15.6 terahash unit, making $209 a day, almost $210 a day. I'm gonna be shocked if this stays over 150 in like the next week or like the next couple days when people start getting them. The Antminer KS5 Pro 21 terahashes on Caspa, making $21 a day. I had to make sure I was at 10 cents per kilowatt hour. We got the KS5 20 terahash unit making $20.26. The Antminer L9 16 terahash unit making $16.92. These things I guess are shipping, apparently. That's what I heard actually on Saturday night. I think Hawk said that. The Gold Shell AL2 Plus, I think I'm actually going to be getting one of these, so I'll be giving some more hash rate away to my VIPs. 1 terahash unit, 480 watts, $12.83 a day. How much is that going for? That Gold Shell. Let's see. Gold Shell. The official site. $16.99. Do some napkin math. $16.99. How much is it making a day? Where am I at? $12.83. I'm just gonna say, yeah, whatever. 132-day payback right now. That's right now if it doesn't like tank. I mean, it's a little over 4 months. Is that worth it? Would you guys buy it? I don't know. It's honestly, I like that it's got the power supply in it and it's Wi-Fi. That's like the use of a heater in the winter is the only reason I like the Gold Shells. I'm gonna be honest. They're a bit pricey most of the time. It's not this one. I'm kind of stunned. It's not terrible. It's not as bad as I thought it was going to be. Price wise, to be honest, I didn't know it was that cheap. I don't want to say cheap because it's really not that cheap, but like $16.99's, it's not as bad as I was expecting. I didn't even look at the price before this stream or ever, to be honest. So that's neat. 2 AL0 is about the same. Yeah, you know what? So that's the thing, right? So the AL0s, you're right. They're the same, but okay. The AL0s are not Wi-Fi. They do not have the power supply integrated. So it's, I think the AL box 2 might have a little bit an upside on that. The only thing that sucks is the wattage, right? Because it's only 200 watts for the AL0. Where's the AL0? Let's see. AL0 400 gigahash is 100 watts, right? $5 a day. Yeah, so I mean you're gonna get more, I think, with the 2 ice reverse versus the AL box 2. Plus, yeah, I mean, again, the Wi-Fi and the integrated power supply is probably the best thing here, and it's just like a home miner, like you plug it in wherever. So I mean, I don't know. To each his own. You make your own decisions. I don't think anybody should be personally buying miners right now. I think you should just invest in the coin. That's just me. But I mean, hey, listen, if you want to get into mining, you need heat for the winter, you have cheap electric, then hey, it might be worth it. But I don't know. Anyways, the KS5M over here, 15 terahash unit on Caspa, making $12.43 a day. Bruh. Man, these are getting bad. Real bad. That's crazy. That is not a lot of Caspa. The KS5L 12 terahash unit making $8.31. Jesus. The original AL box 2. This is the one I got in Solar Trailer. Oh, actually, you know what? Someone's making out right now because I'm gonna be going over their time. Mr. Nismo, it's you. $9.21 a day. That's sick though. At least these things are making some dough. Let's see. We actually, you know what? Hold on. Let me see. What is their AL box going to now? What is the price of that? Because they dropped the price of it. I'm just going to new arrivals. Doge Plus. Where's the AL box too? Did they stop selling the AL box 2 already? Bruh. Did they stop selling the AL box 2? Or am I just fucking blind? Wait, hold on. What is happening? Did they already stop making the AL 2? Oh my god. Where is there a search thing? Where do you search shit? I don't know. Yep, new one comes out and they run with it. Oh my god, I can't believe they already stopped selling it. That's fucked up. Jesus. Gold Shell AL box, the original one, 360 watts. I mean, gigahash is at 180 watts rather. $4.60 a day. Like, listen, you're still making money on this thing, but the amount of money they charge people for it, it's like it's a big, yeah, big oof for sure. Randy, what's up, dude? Good morning, sir. Good morning. Perfect. Good to see you. Thanks for stopping by. We got the Gold Shell EKA1M 5.5 terahash unit at 1800 watts, making $3.23 a day. Man, I really wish these things came out sooner. I'm going back to that site. Where is it? New arrivals. It was under here, right? What is this one? DG1M. What the hell is that? Oh, weird. Oh, you know what? I think they tweeted this. I think they tweeted this one out. Interesting. Dogecoin, Litecoin, and Bells. But this one's the cast one. I like that they're getting into the server style miners, but it's too much money. Should be like 1,500 bucks. I think this should be the same price as the AL2, to be honest. Like $16.99 or something would make me feel better about buying that. But it's still, the profit's not there. Just not there. Damn, that sucks. Casper needs to have some appreciation, or those things are just going to be really bad purchases. All right, Crypto 440, what's up, dude? Good to see you. Good morning. Good morning. Let's see the Gold Shell KA box over here, 1.18 terahash unit at 400 watts, making 66 cents a day. That's it. Bruh. Damn, that's terrible. The KS0 Ultra 400 gigahash unit at 100 watts, 31 cents a day.
Stop the cap.
Damn it. It's so bad. It's so bad, dude. Oh no, look at this. We're finally in negative for the KS0 at 10 cents per kilowatt hour. Wow. 100 gigahash is 65 watts. You're losing 2 cents a day. Damn, that's crazy. Where's my L7? What are we looking like today on that thing? Because I know the S19 is disappointing. So we got the L7 right here, the 9050. You guys know I got this thing down at Terra Hosting. Shout out to them. If you're interested in hosting, links in the description. I pay 30 cents here, so 10 cents down there is a lot nicer. Make it $5.91 a day. Not too bad. It could be worse. Again, this thing's been profitable throughout the entire bear market, so it's nice. S19K. I am losing today on my S19K $1.18 a day. Bruh. I am solo mining BCH though, so I'm losing money no matter what on that thing. All right, moving on. GPUs, let's see what we got, and then we're gonna get into the videos of the day. Oh, actually, you know what? Let's look at the Lithium's hash rate real quick. Let me just refresh this. So the hash rate on the network, 6.68 petahashes right now. We got 2 petahashes on F2 pool. Amp pool looks like they're done with their testing. But look at this. I mean, we have been, how do I change? Oh, this is a week. It's about a week, right? Hold on. Where? Oh, well, no, I'm like looking at the wrong pool. That's why I'm like, wait a minute. All right, so this is the first testing, right? First batches over here when it went up to like 3.5 petahashes on Amp pool. And then, yeah, we're at just about 4.17 petahashes on Amp pool as well, right? Let me zoom in a little bit. There we go. Yeah, so we picked up a little bit on F2 pool, right? Roughly when they were testing here, we have about 1 petahash. We're at 2 now, so we doubled. So we still have 2 more 2 more petahashes incoming, at least minimum right now, like right away in the next week or so. Yeah, because like everything else is pretty smooth, right? So that's really the only, I mean, there's a jump here, but I would say there's at least 2 more petahashes en route on trucks right now. Yeah, it's gonna be rough for lithium. It's gonna be rough. All right, let's see, what do we got? We got Ergo top of the charts, the 170HX. Look at that. What's Ergo looking like? I haven't looked at Ergo in a while. Ergo 72 cents. It's not bad. Could be worse. I say it's not bad, and it's just continuously going down. The yield must be good then. The yield must be good on Ergo, because that is not looking that great. That is looking like trash, actually. I am done looking into that one. All right, Ergo, I don't know what's happening there, but anyways, that thing's been top of the charts for the 170HX again. The 4090 has Xano on top of the charts. How's Xano looking? I know Xano had a giant pump last week. It's up 0.19% today. Holy shit. $6.
Perfect.
Wow, huh? Damn. Xano's coming back with a vengeance. That's nuts. Holy shit. October last year. So almost like about a year ago, right? We're at 95 cents. Now we're at $6. That's pretty good, actually. I wonder why. I wonder what's going on with this project. This is still one I've never looked into, and I really need to now. I wonder if this is going to hold up profitability for a lot of miners. Interesting. That's really interesting, actually. So if you guys aren't doing like Vast and shit and you got 4090s, there you go. I mean, at least you're not losing money completely. I wonder how the algo is actually. Does anybody know mining this? Is it like hard? Is it hard to like, is it core intensive, memory intensive? I don't know anything about it. Please let me know. Grin, top of the charts. What the hell's going on with Grin? On the 4070 Ti, 6900 XT, and the 4080. What in the hell? Grin. The original meme coin. I don't know if it was the original meme coin, but it's been around for a long ass time. A year ago, it's not been doing so hot. But, oh god. This one's choppy as hell. Jeez, I mean, I guess it's been going up for the past month, so. Each his own. I know the G, what was it, the G1? That's crazy. Yeah, I pull a G1 right here. I thought this mined Grin. This is mine Grin. Am I wrong? Mimble Wimble. Isn't that Grin? $11.95 a day. I think. I could be wrong though. Please correct me if I'm wrong. Casper over Xano. Yeah, I would definitely agree there. 100%. What is this one? EVR. What is that? On the 4080 Super. Evermore. What the hell is Evermore? Frog Pow. I've heard of this. I don't know why I heard of this. I don't even know what it is. But this just came out. Interesting. On the top of the charts. On the 4080 Super. We have Neoxa. Neoxa. What in the hell?
Stop the cap.
What's Neoxa at? Down 2.5% today in the last month. Damn. Man, I haven't looked at my iNodes thing in forever. I hope all my stuff's still there. Oh, man. Neoxa's taking a real shit. That's awful. But hey, 6800 XT, I guess, is doing all right. Yeah, so you guys, that's pretty much the consensus all the way across the board. Xano, Grin, Neoxa, Ergo. Weird. This is a weird day. This is a weird day. I don't see any, like, I don't know. It's usually like Tawn, some sort of dual mining. Chlor's on the charts here. How's Chlor doing? Last one to look at, then we're gonna get into the news. Chlor. I really wish this had a good wallet. I would totally buy some. It's 5 cents. It's a pretty decent deal. They actually have a real platform, by the way. It's an AI platform. So this project could do well. This might be a good time to buy. Not financial advice. You guys do what you want. I don't own any, but I would like to. If they were on Tangent, I would buy it in a second. It was up to 40 cents at one point. Jesus. 44 cents. Insane. Insane. All right. Isn't Evermore a song by Led Zeppelin? I don't know. Coat. I don't know. All right. Listen, we're going to get into the videos of the day because there is no real news. So we're just going to See what Mr. Anthony Pompliano's got to say. Invest like a millionaire in a recession. I'm interested to see this video. I haven't had a chance to watch it yet, so let's do it together.
What's up, guys? I thought that I'd do a quick conversation about how did we get to the current economic situation and why studying the last 15 years may actually go ahead and give us some insight into what's about to happen. Now, if we go all the way back to the global financial crisis, there was a liquidity crisis. And for about 6 months, we saw assets like stocks, gold, and others all go down in price. But then the Federal Reserve, they decided that they were going to step in. And when they stepped in, they did two things that forever changed the world. The first is that they suppressed interest rates by making a number of cuts. And the second was they began to conduct a bailout, which printed money and stimulated the economy. Those two things, cutting interest rates and printing money, not only were very helpful during the global financial crisis and helped prevent an even worse financial situation, but on top of that, they also gave the central bank a playbook that they went on to use many times since. So that quantitative easing playbook as a response to some sort of market downturn or recessionary period now governs everything that happens in our financial lives. Let me explain. Coming out of the global financial crisis, we went for a number of years with stocks and other assets all going up. We were in a stimulated economy. It felt like there was money sloshing around and things were looking great. At the same time, interest rates were kept low. They were suppressed artificially. And then towards the late 2010s, the central bank said, you know what? We actually probably need to raise interest rates. And as they began to raise interest rates, the economy got a little shaky. As the cost of capital gets more expensive, asset prices start to fall. That's exactly what happened. Thankfully, the Fed quickly realized maybe we shouldn't have such a high cost of capital. They began cutting rates again, went back down near zero, and asset prices continued to rise. But then in 2020, we got the COVID crisis. Out of nowhere, we got a public health mania, and we were told to sit in our houses. Government lockdowns. During that government lockdown, There was another liquidity crisis. During that liquidity crisis, we saw all assets. We saw Bitcoin, gold, real estate, bonds, stocks. Everything started to go down. The correlation trended towards 1. And the government went back to that old steady playbook of quantitative easing. They quickly did 2 emergency rate cuts, and they began to print trillions of dollars. The trillions of dollars came from both monetary and fiscal policy. We needed to stimulate the economy, and we needed to do it quickly and severely. And so that's exactly what happened. Both politicians and central bankers worked aggressively to get the market to turn around and to get money flowing throughout the economy. As that occurred, asset prices ripped to all-time highs, and inflation exploded. Now, what's fascinating to me is that the use of that quantitative easing, that central bank playbook, was much faster in 2020 than it had been in 2008, 2009. That's because the central bank had perfected the playbook, and now they were more sensitive to the speed of using it. So then we continued in 2021 with higher inflation and asset prices ripping. As we began to get into the euphoria and the mania, the central bank said, hey, we need to be very careful here. We need to start to bring interest rates higher. And that's exactly what they did. In March of 2022, they began hiking up interest rates, but it was a little too late. We saw inflation at that point raging on and eventually peaked at over 9% in the official numbers. The unofficial numbers were much higher. As the Fed conducted the fastest interest rate hikes in history, we went from 0% rates to over 5%. During that time period, there was a lot of people caught off guard. Many investors were left holding assets in the market, and they began to crash. We even saw banks that had all sorts of assets on their balance sheet where they were looking for that 0% interest rate environment and had pushed out further on the risk curve. But now as rates went higher, those assets were underwater, and the banks, if it wasn't for some nice accounting rules that worked in their favor, would likely have been bankrupt. And so as interest rates got raised, asset prices fell. But then something very interesting happened. The politicians didn't get the memo. The politicians continued to print money with things like the CHIPS Act or the Inflation Reduction Act, which actually was just more inflationary. And so asset prices again took off, and we arrive where we are today. Inflation has come down in the official metrics, but asset prices are at or near all-time highs, and interest rates are still over 5%. Now, the reason why that's really interesting is because the market is starting to slow down. We're seeing unemployment tick higher, now sits somewhere around 4.8%. We're starting to see other cracks in the economy. Bankruptcies are increasing, etc. And so the Fed is getting ready to fight another round of a market slowdown or a recessionary period.
Dude, COVID made people so lazy, though. Like, I blame COVID for all this unemployment stuff. Like, no joke. They made people so lazy because they were getting paid more to stay home on unemployment than they were to work.
Thankfully, the one thing they seem to have gotten right over the last couple of years is they reloaded their ammunition. That ammunition reload means with rates over 5%, they could cut 300 or 400 basis points and still not be at zero. On top of that, the Federal Reserve sold off nearly $2 trillion of assets over the last 2 years. And so they could put another $2 trillion onto the balance sheet and just return to where they were in 2021. The Federal Reserve now has ammunition. The market is slowing, but asset prices being near all-time highs puts us in a precarious situation. If the Fed steps in, as they are perceived to do in September, and they begin to cut rates, cheap capital will come into the market. Shortly after, I expect for the money printer to get turned back on over the next 6 to 9 months. If you have interest rates falling and the money printer turned on, asset prices likely will continue to rise. And so whether we are thinking about a recession incoming or we are thinking about the Federal Reserve's response, if you have a mindset of 5 to 10 years in your investment portfolio, it is highly likely, the probability is on your side, that being long financial assets is better than sitting in cash. Cash is the one place that is guaranteed to be devalued in the coming years because our current national debt has reached in the 30 trillions. And it's only continuing to accelerate.
That's crazy. Real quick, Max Voltage said, while I agree, as soon as the spigot was shut off, people came back to work. Today's unemployment has nothing to do with what happened during COVID. Yeah, I mean, yeah, I guess I agree. I don't run a business anymore, so it was kind of like, I saw how it was back then, and it just ruined the mentality of people. It was just awful. So, I don't know. It is what it is. But DJ says, bye. I agree. 1,000% now is the time.
It was at 32, 33, 34, and then $35 trillion. The higher the debt goes, the more we must devalue the dollar in order to monetize that debt and avoid some sort of default.
And what could save us? Bitcoin. Because they can't just print it.
And so a cheaper dollar, a devalued dollar in the future means that asset prices will get higher. You'll need more dollars to buy the exact same asset that you could buy today.
Facts.
So what do you do when you are worried about a recession?
Oh, God. Today's episode. Oh, saw that coming. Dude, it's crazy. You know what? Thinking about like houses and stuff and how kids are going to be able to afford houses, like, you know, this generation. It's like, it's nearly impossible. It's crazy to think about, right? My, one of my cousins, he just bought a house. He's like 20 something, 24 maybe, 25. Dude, they just paid like $800,000 for a house, and it was like old. Like, no joke. It's crazy.
Well, if you have a long time horizon, then you probably should just stay invested. And as asset prices fall, if that recession comes, then you can just dollar cost average in lower. Take net new cash that you have from your job and your savings and go ahead and continue to dollar cost average down.
Yeah, I Know Nothing says they don't want you to own houses. Yeah, they want you to own nothing and be happy. You will own nothing and be happy.
You get to keep the same exposure to the upside in case the recession doesn't happen. But if asset prices do fall, then you benefit because you're buying cheaper assets also. Now, of course, some people don't have that luxury and others will try to time the market. That's not how I invest, but that's plenty of other people. Mm-hmm. So if we go ahead and we take a look at where we are, looking at the last 15 years is really important because my prediction is that if we do get to some sort of market slowdown, the Federal Reserve will have a very, very quick trigger finger. They will use that quantitative easing playbook that they perfected in the global financial crisis and during 2020, and they will fire as many bullets as needed in order to get the market moving up and to the right again. Now, we also are talking about this in the second half of an election year. We have Vice President Harris running against former President Trump. The two of them have very different economic plans. Donald Trump is being seen as a candidate who's going to cut taxes, going to spur economic growth, and will go after lots of different tax policies that should help people in terms of no taxing on tips and look to create more jobs in America. On the other hand, Vice President Harris, Her economic plan is being defined by things like taxing unrealized gains and also borrowing policies from Trump, such as no tax on tips. Whether you agree with Vice President Harris or you agree with former President Trump,
hold on, I got to hear that again. That one part.
No taxing on tips and look to create more jobs in America. So we're talking about this in the second half of an election year. We have Vice President Harris running against former President Trump. The two of them have very different economic plans. Donald Trump is being seen as a candidate who's going to cut taxes, going to spur economic growth, and will go after lots of different tax policies that should help people in terms of no taxing on tips and look to create more jobs in America. On the other hand, Vice President Harris, her economic plan is being defined by things like taxing unrealized gains and also borrowing.
Taxing unrealized gains? Is that what he said? Or on realized gains? I think he said unrealized, right? That's terrible.
Policies from Trump, such as no tax on tips. Whether you agree with Vice President Harris or you...
Did anybody hear that? Like, is it un or on?
Agree with former President Trump. The good news is that they are beginning to reach some consensus. Both candidates agree that there should be a southern wall built along the border. Both candidates agree that there should be no tax on tips. And so as long as whoever wins the White House in November actually carries through with these campaign promises.
Yeah, you guys are saying unrealized gains. Yeah, Geek All Trades could have just done that. Turn on the captions. Dude, that's what? That's miserable. Max said taxing unrealized gains for anyone with over 100 million in net worth. That still sucks. That still sucks. I know, like, yeah, tax the rich because they got the money. I get it, but like, that sucks.
There are good things on the way for the United States.
Geek of all trades.
Stop the cap.
He said, all right, ladies and gents, gonna hit the gym. See y'all around. Fine. See ya.
States and its citizens.
I'm just kidding. Have fun, buddy.
But one other component is that if something like the southern border wall gets built, it's going to cost money, which means we'll have to print more, which again contributes to that quantitative easing playbook that the central bank is likely to employ. And so monetary and fiscal policy is both suggesting that we are going to see higher asset prices over time. And then structurally with the devaluing dollar, you also will get higher asset prices. And that is why the defining question of our time is, were you an investor or were you a saver? People who invest tend to come out on the right side of the wealth inequality gap. People who save and have no investable assets, which is about 50% of Americans, they end up being on the wrong side of that wealth inequality gap. Nobody likes the wealth inequality gap. Everyone wishes that it would close, but structurally, it is hard to see a world where that happens. Instead, we must spend the time, money, and energy to go educate the bottom 50% of that wealth inequality gap and teach them the importance of investing. Show them that investable assets actually benefit from inflation rather than suffer from it. If they do not do that and they simply hold 100% of their wealth in dollars, they will continue to be in a bad situation. They will continue to feel like they can't get ahead, and they will continue to watch their economic power eroded by a government and a central bank that has no choice but to devalue the currency. So it's been a long road to get here. Understanding modern history is important because it gives us insight into what's likely to happen in the future. And then also realizing that who the president of the United States is important. Leadership does matter. But also for you as an individual, for many of you, who your HOA president is may be more important than who the president of the United States is. When November comes, your job is going to be to evaluate both candidates, look at their economic policies, look at their social policies, look at their campaign promises, go into the ballot box and vote based on who you think will do the best job leading our country. But financial markets, although they do oscillate depending on the different odds of who's likely to be the president, ultimately the structural setup is going to overpower whoever the president is. We have seen every single president since the 80s oversee a positive stock market performance during their administration, except for one president. That's George W. Bush. And Bush got hit with two whammies. There was 9/11 on his way in, and then there was the global financial crisis on his way out. If the global financial crisis had not happened, George W. Bush also would have had a positive stock market performance during his tenure. And so both Republicans and Democrats see the stock market continue to move upwards in a positive light. The reason being is that dollar is going to get devalued, the United States will continue to produce GDP growth, and investors will continue to do dollar cost average into assets and hold them for a long time. It is easy to get caught up in all of the tribalism of an election year, and people will agree or disagree with candidates on certain topics. But your job as an investor is to simply look at the data, understand that the long-term trend is in your favor, and figure out where you want to put your money, get long, and chill. Sit on your hands, don't try to trade, don't try to time the market.
Yeah, he's going to say time in the market beats timing the market.
The market with a long-time perspective and allowing the central bank to continue to devalue the currency is going to be your best bet to create wealth over the long run. Hopefully this conversation has helped you better understand where we were.
Yeah, that was a great video. Shout out to Anthony Pomp. So real quick, Hawk said, even at 100 million net worth, it sets a nasty precedent and a lot of money could leave the country. Then what's next, common people? He said it's giving them too much power. Max says the average tax rate of the 400 wealthiest in the country is 8.2%. This is the issue they're trying to address. Unrealized gains tax the right solution? Maybe not. Yeah. I don't think it is. I don't think it's the right solution. But what else are we gonna do? I guess nothing we can do. We can't control it. Just vote how you guys want to vote, and I guess we'll see what happens when shit hits the fan. All right, Ethereum's depressing decline. Who's still holding Ethereum? I am personally, and I'm gonna hold it until we get through this bull run, or up into this bull run, and then I'll be selling it. But let's see what Mr. Lark Davis has to say. I haven't watched one of his videos in quite some time. Let's do it.
Ethereum's depressing decline. Sentiment is
I'm gonna bump
in the
him up
gutter
a little bit
right now for Ethereum. People are starting to question, should I sell my Ethereum for Solana? Is it all over? Well, I've got some thoughts to share on that with you in today's video, looking at why people are feeling so pessimistic on Ethereum and the future, of course, for Ethereum. So let's go ahead and get straight into this topic. And by the way, I hold
real quick. DJ said, even notice taxes don't go down after they're raised. Give them an inch, they steal a mile. Yeah, that's tough.
Ethereum. So when you hear any criticisms, know that that is coming from somebody whose second biggest cryptocurrency investment, which makes up 20% of my cryptocurrency portfolio, is in ETH. Okay, so the price action for Ethereum 100% has been lame as heck. I mean, come on, look, Bitcoin right now, 14% under its all-time high of 74K, by the way. It actually made a new high this cycle. Come on. BNB, 23% under Tron. Frickin' Tron, man. Tron, only 30% under previous highs. Way ahead of Ethereum. Solana, 40%. Ethereum, 45% away from previous highs, which happened in 2021, by the way. Yeah, anyway, at least Vitalik posted a meme the other day with a picture of a cow wearing a placard saying Ethereum is good. So we got that going for us, right? Ethereum to the moon. Look, the obvious underperformance of price has been pretty shocking, actually. And if you look at the ETF flows, I'm genuinely surprised at how just bad they have been. You can see on the screen now that Wall Street has not been buying. What's crazy is that at the same time that they're not buying Ethereum ETFs, they've been buying hundreds of millions of dollars of Bitcoin ETFs. Wall Street loves the Bitcoin, not the Ethereum so much. Now, that's not to say that they won't. It's not to say they won't buy in the future, but...
See, I wonder if it's because people haven't, they don't know where Ethereum's going to go, because Ethereum's history is so much different now. It went from proof of work to proof of stake. And it kind of threw things for a loop. And now that it's been approved, which people didn't think it was going to get approved for an ETF, it's, I don't know. Is it going to come back to bite them in the ass if they invest in this Ethereum ETF? They're probably nervous about it, to be honest.
The immediate aftermath of the ETH ETF has been very lackluster by comparison to Bitcoin. We've had lots of days where BlackRock just literally has bought zero Ethereum. Maybe they're waiting for the grayscale sell-off to largely conclude. We shall see. But not a lot of money flowing in. Price continues to underperform. ETF flows aren't saving us. People, I think, are feeling rather pessimistic on Ethereum overall. Now, not layer twos. That's a different conversation we're going to have in a few minutes. But the Ethereum main chain and the Ethereum asset itself, there's not that much hype for ETH right now. Oh, people are super excited about Solana. I mean, go to your timeline. Look at how genuinely excited people are about Solana, right? People made money on it. There's cool stuff to do over there. You're going to go and buy your meme coins and then buy some more meme coins and then I guess buy some more meme coins. But people are doing that.
I'm never going to be able to unsee that GIF.
Over there, right? They're really excited about it. Even if they're all losing all their money all the time, they still keep showing up to the Solana casino, right? We haven't seen that kind of hype for Ethereum this cycle. previous cycle, we saw some good hype for Ethereum, but Ethereum was broken last cycle in a dramatic way where you were paying $200 to make a swap on Uniswap. It was gross. We talked extensively about the wild fee situation, and that has not been fixed, by the way. On the recent market sell-off, back around the yen carry trade crisis BS, right? The fees on Ethereum went from very, very cheap because not that many people are using the Ethereum main chain by comparison right now. And a lot of the traffic is being offloaded to layer 2s, which is kind of positive, but also a bit parasitic. More on that in a few minutes again. But the fees went from, pretty cheap, $1, $2, whatever, to like, oh my gosh, I had to try to close out a vault over on MakerDAO, and the gas fees were $600 for one transaction. And you have to make multiple transactions to close out the vault. Yeah. When
$600, that's awful. Real quick, Crypto Frank said October is our big month for change in trends, and I agree. Actually, I definitely agree. So does Mr. Max Voltage. Usually around the end of September, October, November, we see things pushing up. I don't know, but also, I mean, like near Black Friday, we usually see like a little bit of a pullback too, because people start spending money for Christmas and stuff. So it's kind of. Yeah, October's usually seems to be the best little push-up month.
The shit gets going in market, Ethereum immediately becomes unusable. It's not very retail friendly right now. It's too expensive to use. The devs are, I don't know, stuck in their ivory towers to some extent. And your average person coming to the space right now realizes there's simply better casinos elsewhere. Now, you have to then, of course, admit that like Pepe, for example, or other new contenders like Nairo, they're memes that are built on Ethereum. And look, there's a lot of money, crazy amounts of whale money on Ethereum, right? They don't care about the gas fees. They don't care about any other stuff. They've got their games that they play there and they don't mind. But in terms of being retail friendly, onboarding normies, you're not going to onboard normies with that kind of experience, right? Plus, the big innovation this cycle has been like the restaking Ponzi's, right? Which are nowhere near as good as like the DeFi Ponzi's of 2020, right? Where you go farm crazy DeFi yields. And it was a good time. We had fun back then. Now it's like, okay, we're going to farm some eigenlayer points for like years on end, hoping to get an airdrop at some point. And I'm going to like put my staked Ethereum, my liquid staking token for Ethereum back into a restaking protocol and loop it a whole bunch of times. And it's a house of cards, but that's for a bear market problem for us to worry about. But still, it's just not as exciting as the meme coin casino over on Solana. So this is, look, some of that I agree with more than others, but this is kind of the sentiment right now for Ethereum. Okay. And again, I've got a giant bag of Ethereum. I'm not trying to fub my own bags. We're just trying to talk about where we are right now, sentiment wise, and what that could mean for Ethereum moving forward. Now, before we get into some of the other more positive points here, I'd just like to point out, in case you're not signed up for the newsletter yet, get signed up for the damn news.
All right. Damn it. I don't know where it usually timestamps it. He didn't do it this time. All right, let's see. Real quick, Crypto Frank said, I know people don't like Coinbase, but right now, 6.09% APY on Solana is great. If you're holding it, you might as well stake it. You know what? That's a great point, Crypto Frank. Hadouken to you, sir. Caveman, what's up, dude? Good morning. Enjoy your coffee, buddy.
More. A lot of cool stuff going on. So if you want to start getting that straight to your inbox, super easy. It's free. Link down below in the description. Check it out. Thank you very much. So all that stuff being said, just, took a big old fat dump on Ethereum there, lit it on fire. Look, the flip side of the coin, that was side number one, the other side of the coin. The other side of the coin is that Ethereum is wildly successful, okay? That it is the industry standard for smart layer contract stuff, right? Everybody has built bridges to Ethereum because that's where all the big liquidity is. The Ethereum virtual machine standard is ubiquitous across the space, except for big outliers like Solana, right? A lot of your favorite chains are built on an EVM standard or have in some way implemented EVM compatibility so they can tap into Ethereum's liquidity. Ethereum remains an absolute behemoth of a chain in terms of daily active users, daily total transactions, stablecoin transfer volumes, total value locked in DeFi, applications built on it, et cetera, et cetera, et cetera. But it doesn't remove the scaling problems and stuff like that. And look, the roadmap for Ethereum is going to take years to play out, okay? And at some point, we are going to get a better Ethereum main chain. We're going to see key upgrades coming, like WebAssembly is going to come, and that's going to allow for lighter applications on chain, for example. And yeah, at some point, we'll actually get main chain scaling, but the push has been to do layer 2 scaling, which can be problematic sometimes, but more on that in a second. It's a pro and a con layer 2. DeFi, of course, has had its home on Ethereum MakerDAO, Aave, Curve Finance, all this stuff, it all started off on Ethereum. But now all that stuff's multi-chain because they're going where the users are, which is not all on Ethereum. They're going to Base, they're going to Linea, they're going to ZK Sync, they're going to Arbitrum, et cetera, et cetera, et cetera. Now, the bonus here is that all those layer twos, with the exceptions of some layer twos like Mantle, for example, which uses the MNT token as gas, all the big layer twos like Base and Linea, they require you to have Ethereum to pay for fees. Okay, so that's creating continual demand for ETH. And big buyers are still buying. Look at this chart here. We've had huge buys over the past few days. Exchange balances as well. Check this chart out. Exchange balances continue to fall because there's more and more demand all the time for ETH on chain. 1 in 3 Ethereum's locked in the staking contract. So there's a lot of positives here. Okay. And then we got to talk about the big picture with layer twos, because layer twos, it's really a mixed bag, because on the one hand, layer twos are wildly successful. They've allowed for massive Ethereum scaling through things like Coinbase's Base. All the most popular apps like Aave are available over there. More and more people are choosing not to go onto Ethereum at all and completely skipping that process and just deploying their coins on Base. Uniswap's on Base, Aave's on Base. All these big things are on Base or Linea or ZK Sync or Arbitrum or Optimism or one of the other 30 layer twos. The layer twos have also been a bit parasitic, right? So they're sucking all the users up there, and yeah, they're still creating demand for Ethereum, but they're not feeding the main chain, at least not very much anymore. And so they're being a bit perhaps extractive. They're keeping the fees, or a lot of the fees. They're very centralized by comparison to Ethereum. Ethereum is wildly decentralized. Can the same be said about your layer two? In most cases, no. There's a lot of things that we could be doing better there, let's say. Layer one.
Real quick, I was looking at the staking thing on Solana. It says 5.35% APY for Solana.
Never scaled. It will at some point in the future, but we're talking years. And that's a big fail for Ethereum, because one of the big value propositions for Solana, you don't have to go to a layer two. You can just keep all your money right here on layer one and do whatever you want and build whatever you want. And yeah, I know it's got centralization issues and stuff as well. Not as bad as many of the layer twos. It's, you know, shades of gray conversation. I know there's decentralization maxis, where if it's not like 100% decentralized, then it's nothing, but then that's almost nothing in the space. So there's that to consider. Look, layer twos are great. I use them all the time. I rarely use Ethereum layer one right now. And it's part of the problem, but it's also a symptom of success. The layer twos are great. Why would you use layer one? But it also creates a situation where liquidity gets fragmented across all these different chains and all these different protocols, et cetera, et cetera, et cetera. So look, I can understand right now, Ethereum is like this guy like Vitalik, right? No, it's a sort of awkward teenager phase. I know Vitalik's not a teenager, but you know, it's a sort of awkward phase is going through right now, where in 2017, it had this very, very obvious use case, which was token sales. In 2020 and 2021, it had the DeFi thing, and that was all very exciting. People were building some other stuff, you know, metaverse and gaming and whatever, and that had its own little moments. But now here we are in 2024, and what's getting you excited about the Ethereum main chain? We're going to restake, man. I restake. I've restaked. Sure, I farmed some points, whatever, but it's not enough, right? And yeah, you can say the big story of 2024 is the runaway wild success of Ethereum layer twos. Completely valid point. But they are fragmenting the Ethereum ecosystem with liquidity, again, spread out across multiple places, et cetera, et cetera, et cetera. And look, this so-called narrative problem we have going on with Ethereum right now, it's not going to last forever by any means. So just think about this. We had Sony recently announce an Ethereum layer two. They didn't go and build on another blockchain. They didn't go and build their own blockchain. They said, hey, you know what? Ethereum tech is so great, we're just going to build our own layer two on top of that. How long until more big companies catch on to that and start doing that? My guess is not that long that we're going to see more and more companies getting on board. And if Ethereum is the home to hundreds of layer twos launched by major corporations and stuff like that, value flows back to ETH. And the fundamentals for Ethereum remain very, very strong. You have to understand, this is an asset that has an Ethereum ETF. It will at some point get staking added to it, that there is good yield to be had from holding and staking this asset, that the new issuance of coins is at max 0.6%, assuming zero burn at all. There is often burn, so it's usually lower than that. Sometimes it's negative. Okay, so as an asset, the fundamentals of Ethereum remain very, very strong. So there's a lot of things working in favor for ETH here. And look, so long as Ethereum can remain the main layer, right? The main layer. I know there's upgrades and roadmap and all that stuff, but as long as the main layer can remain neutral, right? It doesn't matter what happens to layer twos. They're varying levels of decentralization and all that kind of stuff. It all is actually just the net benefit, even though sometimes has a slightly parasitic, maybe we can say symbiotic sometimes relationship with Ethereum. But as long as that layer one remains highly decentralized, which it is, then it serves as a great global financial settlement network. Okay. It has strong neutrality, which in a world of increasing censorship is very powerful and important. Again, final thoughts. I've got a huge bag of ETH, okay? And I recognize its shortcomings this cycle. It has underperformed. The ETH SOL ratio, the ETH BTC ratios is underperforming all versus all that. But my guess as a hopeful Ethereum bag holder here is that ETH will have a hated rally at some point. At some point, BlackRock switches on, the button there and they start massive inflows into ETH through the ETFs. That continued layer 2 success, even though to an extent parasitic, will also have a virtuous benefit in creating massive demand for the Ethereum asset in base DeFi and linear DeFi and to pay for fees and all this kind of stuff. And yeah, the restaking Ponzi, it's a big thing, but more ETH will flow into that as well. So there's a lot of different ways that ETH has that it can be bullish right now. And I know it's not the sexiest coin this cycle, but when that rally comes, it's going to be a hated rally because so many people will be sidelined from ETH. That's not to say it's the one that's going to make the most amount of money, but it will have a great rally at some point. And sentiment right now for Ethereum, the fact that these kind of conversations are being had online again, not everything here is fully representative of my own views, but definitely what I'm seeing online, sentiment probably near a bottom right now. And when ETH starts moving, it's probably going to leave a lot of the haters in the dust and all the ETH maxis get to go and do their victory laps, et cetera, et cetera, et cetera. But for me as well, as I've said many, many times before, this cycle, I'm probably going to completely cut my Ethereum bags. I plan on holding no ETH into the next bear market. So I'll probably take some profits around a retest of the previous highs and then hopefully sell the rest at higher prices later on in the cycle. That's kind of where I'm thinking. Not to say I won't rebuy ETH later. I'm not like an ETH bear at this point. But again, you can understand some of the criticisms that are being levered against ETH right now.
I agree with what he just said. Get out of ETH and in this bull run, sell it, either rebuy later or buy something else or just hold the USDT until, things come back down. That's pretty much where I'd be too. All right, let's move on. Last thing, altcoin daily. Bitcoin's price should easily double after rate cuts. Let's see what's got to be said over here, trying to avoid all of the politics in the chat. Let's do it.
And now I think we're seeing a pretty severe slowdown.
Billionaire investor Dan DePiro, who has been following and investing in traditional markets for decades.
I'm an old guy in the space, and I spent 25 years managing a portfolio and trading in the old macro markets.
Gives a final warning for crypto investors on the latest CoinDesk podcast that the global macro economy is slowing faster than people realize.
The unemployment numbers last time around were weaker than expected.
And really listen to the reasoning.
Every bit of data for the past 2-3 months has more or less slowed down, except for maybe the housing data, which has just picked up a little bit in the US. In Europe has been weak. The Swedish central bank, in fact, just cut rates. The UK is cutting. And most concerningly, I guess, is China. I mean, China's economy has been very soft over the past year, and rates there are back down to 2%. So I start with this picture of where is the macro economy going.
So how does billionaire investor Dan DePiro see this affecting Bitcoin or ETH or even gold? Dan being a Bitcoin and gold holder.
I think we're slowing, not a recession or a panic necessarily. But and I think that's going to be, and it has been bullish for gold. Gold just made an all-time high, last week, and I think people in the new world, in the crypto digital world, the world that I'm in, they ignore some of these traditional market prices. But gold making an all-time high is a sign of liquidity coming, and also the dollar, I think, has begun its bear market. The euro yesterday hit 111. That was the highest level in some time, and I think it's going to continue. And so over the next 2, 3, 4 months, as I look out, I'm very bullish on Bitcoin and Ethereum. Those to me are the core assets of the digital asset ecosystem broadly, as I'd call it. The other cryptocurrencies to me are more venture projects. I think Solana probably is the one cryptocurrency that's maybe moving towards becoming a core asset. But I look at that broad background of the traditional macro, and I think it's very supportive for core crypto.
And with the Federal Reserve about to cut interest rates and Bitcoin still near its all-time highs, consolidating near the top, what do you think happens once the interest rates are cut?
You know what's crazy? We're looking at we see Bitcoin at $58,000. Guys, we're still at $58,000. Like, it's so much. It's so much. It's so much higher than it was, you know, a year ago. It's crazy.
When the interest rate was zero, Bitcoin was around 65,000 at the peak in 21. Rates went to 5%. They're still there, and Bitcoin is now at the same price.
Luke, good to see you, buddy. Appreciate you.
When that short rate goes from 5.
Hawk, your kid's over a year old. You just changed a diaper? This is your first time?
5 down to 2.5 or 3, Bitcoin should easily double just on that. Forget about all of the myriad wonderful developments going on chain and in this space, all the innovation. Forget about all of that. If you just look at that one measure, I think there's cause for being super bullish right here.
And again, I'll link the full conversation down below. There is one more chart Dan needs to show you.
I have this great chart, total active addresses across all blockchains, okay, in June hit 53 million. All right, 6 months ago, that number was 20 million. There aren't that many things that grow 150% like that in 6 months. These are really, I would show you, really, you know, fantastic.
That phone blows my mind, by the way.
It does really look up and to the right.
It's up and to the right. I mean, I look at mobile wallet users just reached an all-time high. Total on-chain transactions across all blockchains, 7.4 billion.
And there's actually this one metric that billionaires like Dan DePiro know of. The average investor does not realize. Free, completely free metrics like this that read the on-chain data, and this can help us, for lack of a better word, time the market, or at least give us perspective on the direction, the momentum of the market. This is all based on Bitcoin's realized price.
But what is the realized price? Well, it is looking at all BTC on the network and the cost basis for all investors. So how do we actually do that? We look at the price in USD terms of each Bitcoin when it was last moved from wallet to wallet. Then what we can do is average out every single Bitcoin transaction on the network to see the average accumulation price for each BTC.
So to explain that in simple terms, realized price is not when the last Bitcoin or the average price of Bitcoin was bought or sold on exchanges. That's the actual price that we all know of. Realized price assumes that the only reason you would move your Bitcoin is to sell it, is to transfer it to somebody else. So realized price is the average price of when all the Bitcoins last moved were last transacted on chain. Some people say this is a more accurate representation of the actual value of the Bitcoin network.
Well, it's not as choppy, that's for sure.
We can see now the realized price is currently sitting at around $31,500.
That's true. The realized price as of August 30th is about $31,000, roughly half of the actual price.
Well, that's where we were last year before these ETFs came out, right? Right around 30.
People on average have paid over $31,000 for their Bitcoin. And as we now sit above $60,000, they're probably at about a 2x on their positions. But we also get these amazing buy opportunities every time Bitcoin is beneath this realized price. If I just move myself over here,
that's a good point.
We can see every time Bitcoin dips beneath this, and the majority of Bitcoin investors, even those that have been involved in the markets for a decade plus, when they're at a loss on their positions, this really signifies investor capitulation. And
that's a good, that's kind of neat. That's kind of neat to just kind of play off that. I mean, damn, you're making some money if you're doing that. That's actually pretty neat. Yeah, they're still arguing about the last video, like 2 videos ago. DJ, I don't know what's happening in the chat. I'm just ignoring it.
Really golden opportunity to buy pretty much the bottom of the bear cycle every single time.
So we can actually use the realized price to give us more specific metrics on when to buy, when to sell. Watch to the end. But really,
y'all got too much time on your hands, man.
If the actual price of Bitcoin today was below the realized price, that'd be an easy buy the dip, golden buy the dip opportunity. Last time we saw that was when around FTX was collapsing at the end of 2022. Bitcoin's actual price was about $15,000 and realized price was just $20,000.
Oh, hold on, that's kind of neat. Hold on, I gotta listen to that again. I was reading what DJ said. He said, "Don't fight over the matrix; it's predetermined. Focus on the upcoming bull run and what kind of Lambo we're getting." Yeah, you know what? I agree. Hadouken to you, sir.
Perfect.
When around FTX was
All right, listen
collapsing
to
at
this.
the end of 2022, Bitcoin's actual price was about $15,000 and realized price was just $20,000.
That's crazy, actually. And that would have been an amazing time to buy.
So again, many people that were watching these metrics loaded up. And for
that's
those of you that
neat.
haven't,
I like that.
highly recommend you join the 1.8 million
shut up.
subscribers. You updated on metrics like this on and off since 2018, 2019.
Let's look at more, because with Bitcoin, we don't just have TA, we have on-chain fundamentals.
Oh my God, that microphone is horrible. I was like, what just happened? It says Altcoin Daily video from early 2020.
This channel will always go that little extra step for you. So let me update you on a few of these price fundamental metrics. We're going to look at realized Bitcoin price, we're going to look at volume weighted average price, and a few more. So hit the like button and let's start.
Again, subscribe if you're
hell, he
interested
didn't
in
even tell
staying
us
up to
anything.
date on crypto. But let's use realized price to go over MV/RV Z-score.
And we can see this is looking at pretty much just the multiple of profit every single investor is currently in. So if I just remove the Z-score here and look at the raw MVRV data, we can see as this currently sits at about 2, well, pretty much bang on 2, it's in line with what we saw previously on the just realized price chart.
So exactly as stated, just looking at MVRV, taking away Z-score, it's around 2. We know looking at realized price, the actual price is around 2 times greater.
Where the average accumulation price is pretty much exactly half of the current price. So everyone's pretty much doubled their money. So certainly not a bad time to be involved in Bitcoin. But if we go back to this Z-score here, this Z-score is just standardizing the data by removing the extremes, especially early on in Bitcoin's price history, especially due to the volatile price action and non-stop accumulation and distribution of coins. Maybe the data gets a little bit funky. So the MVRV Z-score kind of standardizes this using a standard deviation volatility metric. And now we can see this data gives us these really clear and obvious buy and sell zones.
So looking at the Z-score,
That's really neat.
obviously the buy zones are in the green down here. And
That's really neat. It correlates with this line going underneath the realized gains. That's crazy. Or realized price.
take profit zones are in the red.
So the buy zones are, like we could see on the previous chart, pretty clearly indicated by when we're actually at a loss in terms of a majority of investors. When we're beneath the realized cap, we can see that this gives us these golden buy opportunities for BTC, when really we should be heavily scaling into our positions. However, once we see Bitcoin profit at 5, 6, 7, even 10 times the average accumulation price, which we've seen in previous cycles, this is definitely an area to potentially, well, definitely start strongly considering taking some profit on your positions.
But it comes down to who makes this, like, how do they get this red section here? That's what I'm trying to figure out. It's just between 1 trillion and whatever billion market cap, right? Billions. What is it? Probably 20 billion or something. I don't even know. But anyways, how did they make this box? Because obviously if the price goes up, this box is going to change, right?
So what this tells me is,
Have a
while
great day,
it's
Douglas.
not the
Peace out, buddy.
golden buy opportunity, it's certainly not the golden sell opportunity. Anytime under this 2 in the past in a bull market was a good time to continue DCAing in. Last time we were at these levels on the way up, because yes, we came back to these levels on the way down, coming into the last bear market. But last time we were at these levels on the way up was actually in 2019. This was sort of the little pre-pump before the bull run of 2021. Again, very similar to what could be 2024, maybe a little pre-pump before the fireworks really start into 2025. But again, where the Z-score is today is like buying right here back in 2019, like right here back in 2017. Past performance does not guarantee future results. Also pay attention to
neat,
diminishing returns on the golden sell opportunity. Maybe this cycle we don't even touch. Maybe it just gets to 5 or 6. Right now we're still under 2. I will keep tabs on this. Click subscribe for 1 video per day. You do not want to miss these updates. If you're looking for a great place to buy, sell, or trade crypto, check out...
Nope. Don't check them out, because that was a shill. All right. Time to recap things. Let's see. Anybody just joining? Bitcoin, 58,369 bucks. We got Ethereum at $2,500. We got ADA, 32 cents. I think ADA is a steal right now, in my opinion. Solana, 130 bucks. XRP, 55 cents. We got Caspa, ooh, just under 16. Bruh. The hell's going on? We got LTC at 63 cents. Caspa, I bought some yesterday when it was just around 16 cents. I bought 500 bucks into it. I think it was like 550. Got like 3,500 or something. Caspa, I forget. But anyways, I bought some yesterday because it was down. So now is the time to buy, in my opinion. We got Dogecoin just under 10 cents. Blood in the streets. It's time to purchase. All right, let's see. Crypto bubbles. Anything change? Oh my God, my daughter just scared the shit out of me. Oh, don't do that. Dude, you just tickled my arm. All right, this studio's moving. I can't do it because I'm looking at this screen and people can sneak up on me on the right. That's not cool. That's messed up. All right, you gotta give me like 2 seconds, honey. All right. Anyways, looking at Ordi seems to be the top of the charts now for the biggest earner of the day, 29.17. Dude, I jumped so hard and she touched my arm. Anyways, we got HNT at 7.8% over here, up on the day, $7.62. Flashbang for anybody just joining. Again, we have the fear and greed index at a 26. Again, guys, this is the perfect opportunity to start scaling in positions, right? Start getting a little bit here and there. You don't want to throw your entire wad into one coin right now, right? Put a little in, check tomorrow. If it's up a little bit, it is what it is. You might have lost a few bucks, but it could be down a little bit tomorrow. You could have gained some more. You know what I mean? So, is what it is. Let's see. Hawk, yes, you and Max always, you guys are like the rock'em sock'em robots in real life with this political shit. Guys, that's it though. That's it. That is it. My kid's here. She's harassing me now. Got her a new game, so excited about it. Anyways, yeah, that's it. Hopefully you guys have a great, happy, and safe Labor Day. We're gonna go raid Miss Randy Hipper. She is going to be live. Actually, she's live right now, if I'm not mistaken. I'm pretty positive. So we're gonna raid her, and then yeah, that's it. I'll catch you guys bright and early tomorrow morning. Oh, actually, you know what? I don't know if I'll be here tomorrow. I might be. My daughter starts school on Wednesday, but tomorrow's my son's birthday. So I don't know what I'm gonna do. I might stream in the morning if I have time. If I don't, I'm sorry, but we're gonna have to try to, I think, start streaming at like 7. Yeah, I'm gonna have to start streaming at like 7:30 because school's coming up. So I don't know. We're gonna figure it out. Anyways, guys, have a great, happy, and safe Labor Day, and I'll catch you guys bright and early tomorrow morning. And if I don't, I'll see you guys real soon. Peace out. Oh, and don't forget,
if she don't hawk to her, we don't talk to her.
Perfect.
Eat shit, Gary.